We see a bit of weakness in the Asia equity session, down 0.3% or so at the time of asking. And one of the contributing factors, perhaps, is the underwhelming nature of the retail sales data out of China. What did you make of that series of data?
It was a terrible set of data, and it comes in the back of another underwhelming set of announcements out of China on the policy side, of where there's very high expectations and then the detail doesn't quite come through. I think that the China story continues to struggle. Now, I push back on the narrative that sometimes Guy has suggested that, the stock market there is doing terribly. The stock market there has done okay this year. Chinese stocks up about 20% this year. Hong Kong stocks up about similarly from about a year ago. Both of them up about 20%. We think that's a great year in any normal year. It's just that compared to US stock markets, compared to mega cap tech in the US, it's terribly underperformance. And the reality is it was terrible until September. All that performance has been delivered on in the last few months. The data this morning emphasised how big a problem they have and how they're going to have to continue trying to address it. And even then, all they're going to do is stabilise the ship. But I think the market story can still be okay, even though the economy will not suddenly boot off into some bull market.
Mark, what's the positioning into the Fed looking like? If we get a hawkish cut, how does the market react? What does a surprise look like from the Fed?
I think there's an expectation here that the Fed has to be pretty optimistic on growth. They can't yet preempt exactly which policies will be delivered by Donald Trump. I thought, Bill Dudley's opinion piece on Friday was excellent about this, talking about the precedent back when he was the vice chair of the Fed at the same time in December 2016 after Trump had won the election, how they factored in the tax cuts because that seemed an easy one and likely, but they couldn't yet do anything on the tariffs, on the immigration or the deportations that might happen. So therefore, the outlook's likely to be optimistic from the Fed. I think there's expectation that it might be, it'll be hawkish to some extent. And therefore, I think the market's going to look through this and dismiss this. I actually think that even though I am suspicious that US exceptionalism can continue throughout 2025, you do not fight it right now. I don't think there are many major catalysts left through to the end of the year, through to 2025. Even though we've got the Fed this week, I don't think it's going to derail the story.
Mark, in the context of the United States, can you walk us through kind of the competition for trade and how that shows up in the Chinese yuan, in the Korean won, and of course the Japanese yen as well? Is there a trade-off given the geopolitical headlines we're getting from all three countries?
I mean, between them, yes, but they don't necessarily compete in overlapping goods or services too dramatically. So I think none of them want to get too out of line because they can swivel to some extent. What I think is more interesting on the trade thing that we do not know for next year, not just the level of tariffs that are imposed, but what the reaction function is around the rest of the world. There's a sign this time around that some of US's trade rivals will actually retaliate with their own tariffs, and that will be very damaging.